All right. What is going on? What is good? What is good? What are we missing? The clock. There we go. There we go. What's good, everyone? Oh, oh my God. Only like 17 of you, dude. What the fuck? This is why we got to get rid of Friday, man. You guys don't show up. You guys do not show up, dog. Yeah, we might have to go ahead and cut Friday. We might have to do it, chat. What do you think? You think we should go down to 3 days? Should we go down to 3 days? Excuse me. What's good? Naruto, Robert, Leon, Willow, Ibranith, Patel, 2020, Hotshot, Pips, Ricky, RIP, people shorting the low end of the higher time frame. Yeah. Well, that was actually the first point that I wanted to get to today was Dow. And if the market has been down all week, Monday, Tuesday, Wednesday, Thursday, what can we reasonably expect for Friday? You know what I mean? Was good, Big James. Appreciate that. The Pink Floyd t-shirt. Probably should have played their music, but oh well. Make it exclusive and saucy for the ones that show up. Was good, Crispy J. Replace it with another market review. What I would like, I don't know if we have enough people for this, but what I'd like to do at some point is trade of the week or something. You know, where if you took like either a real trade or a funded account trade and you showed the entry and exit, I would do like trade of the week on the weekends. That'd probably be cool. I thought about doing that. Thought about that. Sniper badge upgrade from Robert. Would you go from green to blue? Did you go from green to blue? Very nice. A lot of noobs got bodied today and are in the pits. They will learn to stop selling when the daily is screaming shorts cover. Yeah, I agree. I agree. And yeah, Cameron, a reversal, right? If the market, whatever asset you're looking at, although this happens a lot on the indices, if it's down all week, Friday is usually an up day. I've taught you that for years. For like the longest time. It's such an easy thing. It's just one of those easy nuances. If it's down all week, Friday's typically a reversal day. If it's up all week, Friday could be a smaller range or a down, down close day. So you already know what the bias is going into it. And that makes it easy. Crispy J, I don't know. I haven't really looked at too much today into all the details of the indices like that. Was good, Prosper. Trade of the week sounds dope. It sounds dope. Well, the thing is what I don't want to do is create a like competition. You know what I mean? Because what happens is if people go, okay, John's doing trade of the week now, and I want to force myself to take trades because I want to be on, trade of the week or whatever. And then like that will work against you. And that's probably why I haven't done it. You know what I mean? I might just keep it where, like I do now. Like in last night's market review, I had, called out a couple people saying like, oh, you got this markup, or you talked about this or that or whatever. I like doing that because there's no competition, I don't want things to get toxic. And Willow, I was thinking about that the other day too, about the 2-year mark, I don't know. Ricky, you shorted? Yo, you're a fucking dog for that, bro. You are an absolute dog for that. So, one thing I was looking at, strictly in hindsight, because I did sleep in a little bit today, but what we just did, right? What we just did, if the Dow was down all week, was good, Felix. If the Dow was down all week, Friday can be, not always, but a lot of the times, way more times than not, Friday will be an up close day. So if we anticipate, okay, we don't react, we predict. If we can reasonably anticipate an up close day, do the markets go straight up? Or do they go lower first? If the market, if the bias is bullish, right? So that means heading into 8:30, that means prior to 8:30, we can reasonably anticipate what? That if it's going to go higher, it should go lower first. We anticipate manipulation. We anticipate manipulation. Yikes, Ricky. I feel like you watch Top Step TV a lot and just like fade what they're doing. And I saw your Twitter the other day or yesterday, and you're like killing it every day, which I fucking love that. That is very, very wonderful, and you got to keep that up. You have got to keep that up, my friend. Do bottom left. Okay. So if we went to the daily and saw that Friday could be an up close day, if we anticipate that we're going to go higher, we should go lower first, right? Where can we reasonably go to? And the reason I marked up 8:30 is because that is equities open. So that's when the volatility hits, right? Right at 8:30. So what takes place here? The market opens. It looks like it traded higher first initially. And then what do we do? Wrecked what? London's low here. See that? London's low was taken. We closed off of it on a 5-minute time frame. So what can we reasonably expect after that? You already know, chat. The same model that I've been fucking pimp slapping the markets with, the same model that I taught you already. The inversion model, baby. The last imbalance on the way to a stop run or a stop hunt. A run is where it continues. This was a reversal, so it's more of a stop hunt, but whatever. Boom. There's your manipulation. There's your last imbalance. And then look at that right there. You even get a nice little low. LOW, which is just an acronym for lack of wick. Lack of wick inside the inversion. Boom. Look at that shit. Whoop. Beautiful. Absolutely beautiful. You know what else is pretty nasty too? Oh, never mind. I was going to say that's the 5-minute candle right there. So that is the NCE on the 5-minute. We trade into the inversion at 8:38. So we don't really have our next 5-minute candle until here. Okay, never mind. But still, that's just as solid, right? Shift in price delivery at 8:36. Trading long on the way down. That's beautiful, dude. Look at that. One and done. One and done. I can tell you for a fact my stop would have not went to that low. It would have been probably the NCE low, something like that. But rules are rules. I won't change it up just for the sake of, you know, looking better. So we'll keep it the same. If our stop is going to go to the low, if our reward is exactly 2 times the risk, there's your 1 to 2. Come on, baby. Come on, dog. Too easy. Ricky, you bought this? It was red. I changed it to gray. Are you talking about this one? Are you talking about this one right here? That gray lack of wick? Is that what you meant? Trail dot risk to the inversion. Mark the low day. Bro. I'm telling y'all, dude. Trading itself is hard. Like, it's difficult, of course. But if you just look for very specific criteria, it makes trading so much easier. 1 or 2 good trades is all you need a week. Not a day. A week. Now, Ricky's been trading every day and he's been killing it. You know, I ain't going to tell everybody that you got to be like Ricky. But, you know, you don't need to be a superstar yet. But to pass a combine, the 50K combine, you need 3,000, right? So it only takes a few good trades like this, a simple 1 to 2. And again, that's with the loosest stop. Okay. If you're playing like this imbalance, the stop could have went here and your 1 to 2 would have been a lot less than that. You know what I mean? The 1 to 2 could have been right here. Easy. Easy. Oh, down here. You bought down here. Yeah, that's pretty G of you to do that. What you should have done, Ricky, is you should have woken me up and then said, hey, come take this trade with us. But you didn't do that, Ricky. You fucking left me out, dog. You let me sleep in. You let me sleep on my dreams, Ricky. And it's all your fault. It is all your fault. It's all good though. But yeah, 50 level, right? 40,950. Nice 50 level there, setting our low pretty much. And then yeah, that was sick. Getting in on that is insane. Add on or late entry, and then easy run above pre-market high. Now, I'll tell you this too. 9 o'clock had news, so I would have not held longs through news like that. Personally, it does come back. It gives a very deep retracement. Takes the 9 a.m. candles low at 9:20, right? So it gapped down, dropped right in 1 minute, and then came back up just to hit the gap, and then traded lower for that low. And we actually get, let me just take a look. I was going to say we have a gap right there coming off of running that low, but we don't really trade back into it. But what we do trade into is those two down candles put together. So that's not terrible. Hindsight, obviously, I was not in front of the charts for that. But what I am trying to show you, what I am trying to teach you is, if you know with probability's sake, right? If you know, okay, it's been down all week. Today should be an up close day. If it's going to go higher, it'll go lower first. You have all the criteria you need. You know exactly where it's going. You know exactly what it's going to do before it does it. And the best part, right, is that the market is not, in the way that I'm teaching you this, okay? The market is not going to take off without giving you an opportunity. Now, sometimes it might seem like that. Sometimes it might seem like that. Oh man, it didn't come to my entry. I didn't get filled. This is bullshit, whatever. And I used to think the same thing too, right? And this is why you have to study. What did you miss? Right? And that's how eventually I came to the conclusion that I would say 99 times out of 100, it's not just going to take off without you. Okay? It's going to give you an opportunity. It's going to say, here's your chance. If you miss it, now I'm going to take off. Does that make sense? Chat, you can put your answers in the chat. Does that make sense? Here's a perfect example. That right here. Okay? You have an imbalance here and one here. When you have two imbalances, what do? Trade the first one, stop at the second one. Right? Even if you miss that, the inversion, it trades through it. And you don't do what they do over on Twitter and you just long the next candle. You're asking for drawdown. I don't like that. Okay? I would rather say put the entry at the inversion. Then it's okay to take a little bit of drawdown, but it won't be much if the market is going to go higher. You will not be in drawdown for very long or for very much. It doesn't spend a lot of time here. It barely comes back to cover the imbalance and to cover that lack of wick here. Okay? Remember we spoke the other day? We've done this multiple times already. Remember I told you the first imbalance in a reversal is what? It's typically either a breakaway or it won't fill 100%. It won't fill 100%. Does that imbalance fill 100%? No, it doesn't even go halfway. Why would it not trade all the way? We've been over this. Why would it not do something like that? Why would it not do that? Or like something like that? It can, but why doesn't it usually not? Because remember, if this is a stop hunt, look at all of this in here. You see these few candles in here? Upside, lower. Upside, lower. Downside, upside. Downside, upside. Right, Naruto. There was a lot, well, I wouldn't say a lot. It's a 1 minute time frame for like 4 minutes, 3 minutes, but there's back and forth on both sides of the market. It's literally printing higher and lower, higher and lower, higher and lower, lower and then higher. So this, I guess, you know, if I'm stating this correctly, is a balanced price range. So you have the inversion here, and then you have your first imbalance in the reversal here. and that's why the market taps into that. Doesn't need to come down here because it's already had a lot of business at 41K. Did you notice that too? 41K even. Why do you think price does a lot of business at 41,000? It's a whole number, the zero level. Institutional pricing, basically. And roughly that 80 level as well. And I say roughly because we did trade outside a little bit, but notice that 980 to 41,000 even, it's staying within that price range for the most part. Institutional pricing. Well, in short, it has to deal with that. Okay, it's not so much like the psychological shit, but smart money buys at and below old lows, right? And 41,000 just makes that. So there you have it. There you have all the details down in here. So the reason that I'm telling you the market will, 99 times out of 100, it will give you a chance to enter. You might think, well, I wanted a little bit lower, you know, I wanted the 50% level of the inversion or whatever, and it doesn't give it to you. And you're like, oh, that, you know, this is bullshit. It's not bullshit. You just asked for too much. And you're not used to, I guess, buying this sort of retracement. Because, listen, again, I used to be this way too. And this is exactly why I draw my fibs backwards and not forwards. Remember in the 48 Laws video, I gave you both. I told you the law of logic, right? And the first example I gave you was we have a low, we have a high, and then we have 50% premium discount. And then on the very next example, I told you what? I measure from targets to a low, right? So that's the reason why a lot of people won't buy something like this, because this is exactly what you fucking do. You go, oh, that's a low, that's the high. This is only, you know, whatever, 30% retracement. I'm looking for a 618. Dude, fuck your 618, bro. It ain't going to it. It ain't going to it. Because the market doesn't care about that. The market doesn't care about your 618 bullshit ass retracement. It doesn't. And this is why, like, for example, this high wouldn't be my target, but just for example's sake, if you have a target down to a low, this is actually below 50%. So that is a discount. That is buying worthy. And I got you, Ricky. One of the Ricky and I were on the phone for like an hour the other day. And you know, don't expect that because I'm not going to talk to fucking all of you for an hour. I can't really do that. But not to make y'all jealous or anything, but Ricky and I were talking and we talked about a lot of things. And one of them, you know, of course, was opening price, right? The opening price logic basically is what it is. You know, there's no special names for it. There's no, you know, reason to call it anything other than what it is. You know, it's opening price. And it's just a logic, right? You have equities open. You have midnight New York, which is 11 p.m. EST. Or no, excuse me. It's midnight EST, 11 p.m. CST. Sorry about that. Right, so you have 11 p.m. CST, which is midnight New York. So those are two different reference points where if we are bullish, we could look for longs below those price levels. Ideally, whichever one is lower. Now, a lot of people use it now. They didn't years ago. Of course, I'm always years ahead of the curve. Oh man, John and his ego. The truth doesn't have ego, dude. Okay, I did a lot of shit years before everyone else did. But anyway, when people started talking about midnight EST, I elected to go with equities open instead. And this is exactly why. If equities is below midnight EST, then I would rather be below equities open because it's even lower. You know what I mean? So when you're below both, that's even better. Where does this inversion occur? Below both of them. Where does this imbalance, this lack of wick, where does it occur? It's below the orange, which again is 8:30 Central, and it's below midnight EST. So everything in here is a discount. That old low, buying below the old low, is a discount. I wouldn't long that down candle necessarily, unless I was looking for an NCE. That's below all this shit. Everything here is below. And of course, even those retracements in here are below both. Now, these down candles here, that could be a long, even though it's above our opening prices, but that's only because we came down, worked it, news, we were below it again, and then this move here took that low one more time. So again, if it's bullish, it won't spend a lot of time in discount, right? So now look at the day. Discount, 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 because it's all below the two reference points. It's above it, but it's close to it. And that's why from the beginning, like 4 years ago when I introduced this idea about buying below the open, ideally below the open or close to it. Do you guys remember that from years ago? And from when I taught it to you, you know, whenever you learned it from me for the first time or whatever, do you remember I specifically said that, or close to it? And this is exactly what I'm referring to. It's not below it, but it's close to it. It's just reference. It's just a reference. It's subjective, right? It doesn't have to be within 20 pips or 30 points or whatever. It's just look at the fucking chart. You know what I mean? And is it close to it or is it not? And that's it. Under old, my man said Lowe's like it's Home Depot. Anyway, under old lows on higher time frame, we wait for 1 minute shift and price delivery to start to add onto the order. 8:34 shift in price delivery, NCE stop at low of day. Okay, that makes sense. So Ricky, are you pyramiding? Like, are you adding, like, do you long and then long again? Or do you just long one time and then watch it, and once it takes off, like, move your stop to lock in? Yeah, do you pyramid? Like, do you build multiple positions? Or do you just, like me, I just try to go all in once. I don't pyramid all that often. I tell you what though, when you pyramid and you get it right, it's fucking nasty. It's absolutely insanity. I told you guys that when I passed my first combine, one of the trades was like that. I shorted ES, and then a little bit before the target hit, I shorted again, just for like a little bit more exponential growth on that. But yeah, either way, that's just disgusting. All of that is just dirty. The dirty 30. And then even moving on, I can tell you what happened too. A lot of people tried to probably short this, and they got their ass handed to them. Right? because you probably tried to short on a bullish day, right? You pulled a goober move. You pulled the old goober move. Mitigation model here. Low, high, lower, low. Highest up close candle. Really fat imbalance in here. I'm only measuring the lower, like this candle's high up to the gap right there. Both overlap. Market makes a new high. That is an easy opportunity as well. But John, hold on. This wasn't equal highs. This wasn't low resistant highs. You know, why would the market do that? Well, again, I already told you, if today's supposed to be an up close day, why would you short? For what? Why on earth would you short? I don't know what we're going to do here. We made a new high of day already multiple times. We're kind of in the middle of this range. So I don't know what to expect from here. But the idea is, if you've already had multiple opportunities today back in here and even in here, why would you need to do anything for the PM session? I have rules for as it goes up based off expansion and down candles in a trending market. Well, I can tell you, if it was me, what I would have done, Ricky, at 20 contracts. If I was in 20 on something like that, I would probably do 5 off here. Probably like 10 off there. And then if I knew news was coming at 9, I probably would have just closed a few minutes prior on whatever was left over. And I don't even know if there was anything up here. Yeah, because the market doesn't trade into that until way later. So I'm not even sure like what the upside target would have been as far as anything over there. I guess maybe that gap. I probably wouldn't have done that. I probably would have just got out way before that, to be fair. Yeah, I probably wouldn't have waited for that, honestly. If that was in 20, yeah, I probably would have got 5 here, 10 here, and then probably one more candle. I probably would have closed the rest of it. If I'm being honest. If I'm being honest. That's probably what I would have done. Because I wouldn't have waited for this. I probably would have had the impatience. I probably would have said, let's get paid and that's it. Go home. Take the top off and go drive around. But yeah. Yesterday's data highs. Well, that's the thing. That's what I was saying a minute ago. We had the 9 o'clock news, and I would have not wanted to hold through that. Well, there was news at 9, right? I'm not like tripping, because that's a 1-minute candle. Thank you, Flacco. Would I have shorted the gap on YM? No, hell no. I wouldn't have. Even though, you know, in hindsight, it looks good. From that to that, like a new low. Yeah, I mean, that would have been a solid trade. But again, if the day is supposed to be higher, why would you go short when you could do so much better going long? I've done it. I'm not gonna lie, I've done it. You know, I've shown you trades like that where I shorted and, you know, down to like equal lows or something, and then the market, you know, railroaded everyone else to go higher. Oh, yeah, I've done that. But I typically try not to do that. It's counter trend. You're not getting as much juice. It's not as easy. It's just more difficult, you know? Like you're making it more difficult on yourself. Why would you do that? $41,480 up here. Anyway, we spent a lot of time on Dow today. If we come back to NQ, the 9 a.m. news actually took us below the equities open low. Right? One of the ICT juniors tried to post that the other day. They said, oh, the opening range is the first 60 minutes. No, it's the first 30 minutes. How do you even come up with that when your own fucking teacher told you differently? That's fucking wild to me. That's fucking wild. But anyway, I don't want to keep talking shit. 9 a.m. took us below that, where Dow was higher. So what does that tell you? That definitely is manipulation. And then what happens here? 9 a.m. to 9:20, Dow is lower. 9 a.m. to 9:20, what's happening here? NQ is higher. NQ is higher. I know, Stephanie, fucking wild. People like just want to be mentors so bad. It's like, how about you get your fucking information correct before you do all that dumb shit? But, you know, what can you do? What can you do, chat? Anyway, accumulation, right? Because again, it's making a higher low versus Dow. We trade through this down candle here. We spend a lot of time in that, which I would not have enjoyed at all. I would have hated that. But it eventually rips, which is cool. Then there's an imbalance here, which this is not a mitigation, but again, it still functions as one. And I know I've taught you guys that before too. This. Right? Because the sequence here is low, high, higher low, not lower low, but it functions in the same manner as a mitigation. Meaning, if smart money was up here shorting and up here shorting to go lower, once the market does some shit like that, that's their opportunity to exit any shorts that they have up here at somewhat of a discount before the market is going to rip their face off. See that? So again, we have a higher low here, but coming off of accumulation after manipulation, boom. There's your mitigation function. These down candles get respected as well. There's a reason I show you all this stuff, chat. Today, most of today is pretty much hindsight because I wasn't really in front of the charts like that today. Okay? But I've shown you countless trades. I've given, how many fucking times this week did I give you levels before they hit? You remember yesterday? We were talking about ES. One of you posted that chart and I said, well, we still have Tuesday's low that's on the table. And then what happened? A little bit later, it went below that low. It's not hard. You just got to get used to it. Where's the liquidity? Trade in that direction. Or if you're bullish, wait for the market to go lower first. And again, in today's case, if indices are going to go higher today, wait for it to go lower first. It didn't go lower at equities. It just took off. Okay, that's fine. Oh, but John, I couldn't find an entry. That's okay, bro. That's okay. Sometimes the market does take off. But guess what? It came back for that same low. So anyone trying to chase higher pricing got fucked on the news. So now that they're out, they're all scared to go long now. They're seeing these big ass candles. They're seeing, oh, new low of day. They're reading the news, Trump this, Trump that, Elon, who, whatever, doing other shit. 420 level, right? Where's that at? 420. Boom. Where'd we accumulate overnight? That 420 level. I keep telling you, you can't escape it, chat. And y'all keep thinking I'm bullshitting. Can't escape that 420 level. I don't make the rules. But everybody's scared. Oh, I got knocked out. There's a lot of volatility, whatever, whatever. Well, what do you think the market does, bro? Takes everybody out, then reverses. And all you got to do is get in sync with that. Wait for them to get knocked out. You can wait for proof of accumulation. And then play the retracements. It's not hard. I got to indicate. I don't know why I keep drawing it. I have indicators that do this. Literally have indicators that do this. There's midnight EST. We traded below it twice. And I don't know why the other one's not on here. Unless I deleted it somehow. Well, I didn't mean to, but whatever. There's your equities open. There's a 30. There is midnight EST. We trade below that here and here. We trade below equities one more time. So you're trading close to it, just like Dow, near it. And then everything else I already talked about. Okay. Simple ideas all the time. I've given you all the nuances. The market goes lower before it goes higher, or higher before it goes lower. Okay. Let the market take everybody else out. Have the patience. Play the retracements after that. You know what I mean? And it shows. Doesn't it, Willow? It shows when you follow the rules, right? First week on the funded account, and Willow's up 2%. That ain't bad. That's not bad at all. Because you follow the rules. It's that simple. 19,465. Oh, that's equities open. Yep. At the open, it sends it, manipulates it. We trade below it a few more times. And then, yeah, accumulation here. Let's talk about this one more time, because I like really want you guys to understand this shit. Why does price not trade to the low end of this imbalance? Why does it leave the bottom half open? Because just like Dow, look at all this in here. Well, I guess at least this. Look at that range in here. Higher, or excuse me, lower, higher, lower, higher. A lot of back and forth, a lot of back and forth, a lot of back and forth. Oops, one-sided market. Then we come back for some level of sell side price delivery. But if it leaves the bottom half open, which it should, that's a bullish signature. What happens here? Same thing. Now, mind you, these down candles and this imbalance, it does trade to the lower end. It does, right? Leaves like a sliver open. But still, what does it do after that? It fucking launches for the morning's high, because it's attacking that liquidity up here for anyone that's still short prior to news or just after. So that's what I'm saying. Like, it's not just look at all the imbalances, look at all the mitigations. Oh, that's cool. This is cool. That's cool. But for the longest time, and you were probably this way too. Matter of fact, don't do it yet. But in a second, I'm going to ask you to drop some threes in the chat. Okay. If this is you, the first time, let me put some music on because now things are getting weird. Just hear myself talk. Drop a 3 in the chat if this has ever been you. You learned about an imbalance or a fair value gap, whatever you want to fucking call it, okay? Or you learned whatever concept and you go, oh, this is great. I just learned a new concept. Now I've got a new tool. Let me go into the charts and figure this shit out. And you probably started taking trades and you probably started taking losses because you didn't understand which imbalance to trade, much less inversions. Probably didn't even know what the fucking inversion was. You went, well, what about this imbalance? Well, that didn't hold. Well, what about this imbalance? Oh, that one held. But why didn't this one? I had my order at the lower one. Why didn't it get the lower one? This is bullshit. And you probably were confused as fuck. Some imbalances work and some don't. Well, his seem to work, but mine are like, oh, what the fuck? I might get one every once in a while, right? Yours works every once in a while, but I promise you did not understand in the beginning. You did not understand why. You just went, oh, finally, thank God I found the right imbalance. I'm on like a 5 losing streak, but I finally got one. Yay. Drop some 3s in the chat if that's ever happened to you. You learned a concept, and when you tried to apply that concept, you got your face ripped off. It's okay to drop 3s in the chat. It happened to me too. I'll drop a 3 in the chat. It happened to me too. Listen. In America, okay, we were all created equal. Concepts are not created equal. Every imbalance is not equal, okay? Some of them you expect to hold. Some of them you expect to fold. Some of them you expect to be continuations. Some you anticipate to be reversals. Yeah, Pop. That was me at one point. Oh, look, an inversion. Bet. Instantly clapped. Appreciate that, Cody, Daniel. We got some non-members in the chat today. Very, very nice. Very nice. It is open today. Robert said, I'll be honest, John has helped me a ton, especially when it comes to lower time frame. But I notice when I learn something new, I go all in on the concept and forget about the fundamentals. I'm currently in the process of now putting all the puzzle pieces together. Right. The law of confluence, Robert. You remember that one from 48 Laws? The law of confluence, where multiple concepts overlap, or concepts with inversions overlap. Hence this imbalance right here. This imbalance had a mitigation as part of it. That's confluence. It worked. But that's the problem. And look, I was probably the same way when I started teaching too. I probably did not teach putting it all together. And that's probably my fuck up. But after a while, I was like, yeah, probably need to help people out, because I kept getting the same questions. You know, oh, imbalances are cool, but how do I know which one? This concept is cool, but how do I know which one? Seven-figure trader. What did you say? Did you say ICT or did you mean ACT? ICT is always going to find something to cry about, bro. It's something new every week. It's always something. It's neither here nor there. But anyway, I have given you logic. I have given you confluence. I have given you frameworks, which is like the buy models and the sell models, right? MMXMs, the law of the roadmap. Find the liquidity, trade in that direction. If the market traded lower, where's the liquidity? Above the most recent high, here, or at high of day for anyone that's short. Find the liquidity, trade in that direction. How do we know which imbalance? Well, we don't have really any imbalances in here. We have one like right here, but we don't really have like anything that stands out other than this mitigation. But we do have an imbalance here that stands out, and it's forming an imbalance on the way to opposing liquidity after accumulation. So that should be the imbalance. This could be a late add-on or a trade management. What do I mean by trade management? Meaning if you're already long or long here, okay? If I'm long here and I see that we created an imbalance on the way up, I won't put my stop just below the imbalance, but I'm fine with going break even because I know I have an imbalance and these down candles protecting against that while targeting, you know, something higher. And then once we get that launch, then I can say, okay, my stop can go here or below this last imbalance or whatever. And then I can basically trail that stop higher and higher and higher as we, you know, print new data, if that makes sense. I mean, look, I'm not going to say that I don't complain about stuff too. I do. I used to complain a lot. Matter of fact, I just unfollowed like over 200 people on my Instagram because it took a long time and it was very meticulous. But what I was doing is I would click on random people's profile and see if they were following me or not. And so a lot of people unfollowed me the last couple of years. Even though they follow a bunch of the trade house, they unfollowed me specifically. So it's like, all right, well, I'm gonna unfollow you then. If you want to act like a little bitch, you know? So that's why I did that, because I'm just like, okay, I'm not gonna follow you then. So yeah, I mean, I could complain. I could find things to complain about. But as a stoic, or at least, you know, trying to be more stoic, I don't want to be like that. I don't want to find things to complain about and then, you know, bitch about it. But that is true. I did follow, go look at it. I follow less than 2,000 people now. But rather find solutions. Yeah, that's a good point. That is a good point. But anyway, that hour went by actually pretty quick. It's already 1 o'clock. So, that'll be it from me. You just got to go study, man. You just got to go study. The 5-minute doesn't look all that great. You know, you might look at it and be like, oh, this is bullshit. It's not bullshit. It's not. Once you really get into the details of it, you find all the opportunity. Look at that down candle here. Look at that. Accumulation, down candle, boom, 940. That's also a shift in price delivery. And then it trades through that gap here, back into that gap here. Look at that. You see that? Traded through the gap, into it, off of it. What was once bearish can become bullish. Ooh, the law of the return. I'm telling you, chat, you got to study, man. You got to study. You're not going to be a master of all these. I wouldn't even say that I'm a master, you know, of all the concepts per se. But you don't need to be. At the end of the day, you just need 1 or 2 good trades a week. And that's it. The only thing after that you got to worry about is size, getting funded, or trading more live capital if that's something that you decide to do on your own, right? Scaling up, you know, instead of risking $50 a trade, you know, eventually you get to risking $100 a trade. And then it's up from there, 200, 500, 1,000, 5,000, whatever it is, you know, for you, whatever level that you get to. And that can be scary, you know, putting a couple $1,000s on a trade. You're like, oh shit, I'm going to put a couple $1,000s on this inversion. It's scary. I ain't gonna lie to you. It's fucking scary, but you get used to it. You get used to trusting the setups, and you get used to only looking for 1 or 2 good trades. Look what I did. What was it? I posted it the other day. I think it was the Nasdaq trade, the micro Nasdaq trade. You remember I shorted, but I got break even, and then I took that win in a little bit later, right? It's the same thing. Every trade won't be a banger. Every trade won't be a winner, but that's not what you're looking for. You're not looking for 100% strike rate as much as you would like that. That's not what it's about. It's about losing a little bit and winning a lot when you win. So, what's your experience with trading the 5 or the 15 minute when the 1 minute looks terrible? Well, you thinking that the 1 minute looks terrible is a value judgment, my friend. That's the problem. If I don't like the 1 minute, the 5 minutes not bad. The 15 minute is cool too, but just realize if you're only trading a 15-minute time frame, the drawdown's a little bit more. For me, it would be at least. But if I was trading a 15-minute time frame, I would only trade around the opens and the closes. You know, like say 9 o'clock took us lower. I'd say, okay, let's wait for 9:15 to close or 9:15 to open and like see what's good. And then 9:30, same thing. That's a new 30-minute candle. So here, I'll give you this on the way out. 9:30, okay? How can you expect when the market trades against you and how to like not like shit yourself? Again, look at the time compression matrix, okay? If I'm long, let's just say down here, okay? Just as an example. If I'm long down here and then 9:30 comes around, as soon as 9:20 starts and then it closes and then 9:30 opens, I already know if we're going to go higher, it's going to go lower first. So I already know, don't look at the P&L because it's definitely going to drop because it's going to trade below its opening price. So don't be scared when you see that. You can expect it. Same thing at 9:45. 9:45 rolls around. The market starts trading lower. Oh no, maybe I'm wrong. I'm getting scared. Maybe the trade's bad. It's not fucking bad. It's trading lower and it's going below the 9:45 open, but look what it's trading into. It's trading into that old gap and then going higher. So don't be scared of pullbacks. Don't be scared that the, P&L's dropping because the market's going against you. Yeah, it's going against you a little bit. And then look what happens if you got scared, right? You got scared and then boom, the market boomed without you. And now you're going, oh shit. I got out before the big move, man. Now you're pissed off the rest of the day. You expect that anytime you're in a trade. Okay? If you've ever held on to a trade all day, okay? Look at a range. Every range does not move in a straight line. There's going to be pullback, 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 little pullback before this. There's multiple times the market pulls back. Those are not only entries, those can be add-ons, but you expect that. So you don't cry about it and you don't get scared. The market will go against you. But why is it such a bad thing if it goes against you a little bit to then go for you a lot? That's what I would do if I was only limited to a 15-minute time frame. I'd say, okay, I don't know what the fuck's, I don't know what's going on with the 1 minute. I don't know what's going on down there. But I'd say, oh, that's probably manipulation. Next candle entry would have stopped at that low. I would have taken some drawdown here a little bit, and then boom, market goes my direction. Same thing, gap here. That becomes an inversion at 9:45, and then higher. Look how well timed that is. Like, do you guys not see that? Look how scripted that is. At 9:45, boom, then it goes. That's time-based delivery. That is time-based. That's not somebody buying it. Warren Buffett coming in there and doing some shit. That's not that. That is time-based delivery. Look at it. Trades through at 9:30, or that 9:30 candle, excuse me. And then the 9:45 starts to trade down to then launch. It's time-based delivery. So you know when the market's going to trade against you. Right around the open and the closes of the higher time frame candles. The 15-minute, the hourly, the 30-minute, something like that. Now, mind you, if you're in near the low and you're getting close to the high, why are you worried about pullbacks in the middle of the range? What are you worried about? If you're stopped out in profit, that's still a winning trade. You know what I mean? So, anyway, hopefully that helps. I'll go ahead and end it here. Y'all be good, be blessed. We'll be here same time, same place on Monday, March the 17th. All right, so don't do anything stupid until then. Make sure to study, print off the charts, journal, and all that good stuff.
Cause I'm gone. Only 2 years old when daddy used to bring them hookers home. Looking like my grandma. My niggas got that ammo. We Jackson and then light up the L. Samuel, Tunchi in this bitch, nigga. Y'all niggas, bitch, niggas. Rats gon' rat and snakes gon' hiss, nigga. Baseball rich, nigga. Do this shit for all my homies. Where them bad bitches at? Come and put that pussy on me. Tunchi, you a murderer. Boy, you just be killing shit. Yeah, you know that money talk. I am the ventriloquist. Tranquilizer in a trunk. Put your ass to sleep, man. Birdman Jr. got the world in my wingspan. How you niggas wanna have it your way? Burger King, I get deep in that pussy. Dig her out. Surgery. Fucking with a real nigga. Fucking right. Certainly. Break in your fucking home. Take your life. Burglary. Whoa, nigga. Die slow, nigga. For dear life, you're holding on. In vogue, nigga. Unload, nigga. Reload, nigga. Tools on deck. Home Depot, nigga. Well, if life is a bitch, then mine a gold digger. Yeah, and all my bitches nasty like a cold dinner. Every day I go so hard and work my ass off. I'm good, I'm 100 like a fastball. It's called a FAFO. Yeah. I'm going back in, man. Yeah, we get fucked, y'all money. How you want play it? That AK sleep on the side of my bed. That's one eye closed, one eye open. Your cap get peeled like ibuprofen. I'm sick, I'm ill. I ain't the nigga to fuck with. It's a crazy world and life is shorter than Bushwick. Young money, man, we got this shit by a landslide. Boy, I send them bloods at your ass like a tampon. Uptown shit, wet the whole party. Weezy gon' ball like Steve Harvey. The forget the